Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. The Dow and S&P 500 again hit new highs, but the big story is the breakout of silver followed by uranium. Ross also looks at gold, crude, and the U.S. and Canadian dollars. He also has a special offer for our listeners. Founder of Armstrong Economics, Martin Armstrong, joins us from Florida to talk about storms that may have hit insurance stocks. He tells us money is flowing to the area least likely to be hit by the conflicts in Europe and the Middle East. That turns out to be the U.S. He also gives us his thoughts on a possible U.S. civil war. Author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash, Hilliard MacBeth, comments on the state of Canadian real estate, the stock market, and what voter turnout could mean for the U.S. presidential race. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on X at Charts by Ross. Welcome back to This Week in Money.
Always a pleasure, Jim.
Ross, how would you describe what happened on the markets this week?
Steadily higher as far as the equity markets are concerned. And, here we are with the S&P and the Dow closing off at new all-time highs again. The Russell's having a bit of trouble getting through its old highs, and the NASDAQ, which had been the leader back in the spring, and the Mag 7s, they are still a fair amount shy of the highs that we put in. Although you've got items like NVIDIA, which is up just kissing against its high. That's been a pretty darn good recovery off the lows that we saw. But at this point, equity markets, they're in their seasonal strong period. Quite often there's that one little hiccup at some point in October, November, but then continuing higher. Looking at the markets, the S&P, the 20-day moving average is what I'm still looking at as the key support. We did get down and kiss that back around October the 7th, and at this point, if we were to come back, we'd be just kissing again on a retest of the most recent breakout. I think the level that you want to really keep in mind over the next month or two is the highs that we put in back in July and August, which were around just under 5,700 in the S&P. As long as we can hold above that, the trend remains up. And, the seasonals would suggest that, as I say, if the pullbacks are mild and don't break, then you've still got room on the upside. The longer-term cycles, like the 17-year cycle, that is now at the tail end of the time window, so you'd be expecting something in the way of an important high in the coming weeks or months. So, I would say that the peaks that we put in July, August, should be viewed as really not just a support area for traders to be watching, but for longer-term investors. If we do start to see a rollover here, you don't want to overstay your welcome.
What's going on with gold?
Gold has had an exceptionally good move this week here. We ended up at all-time highs, and I guess not surprising for people who have been watching it on the breakout that it had. Originally we had a 3-month consolidation under 2460, then new highs and consolidation around 2700, and mild correction, but 7 or 8 days ago gave us some short-term oversold readings, what we call a springboard, and that has just punched us from 2,600 up to through 2721 as of the close of the week. The interesting thing here is that the gold market through September was doing reasonably well at moving on the upside and then holding for about 10 days or so, while the dollar index, the U.S. dollar, was just barreling away on the upside. And so for gold to have held well during that strength in the dollar really boded quite positively for the metal. And so as of this week, we've seen upside exhaustion signals as far as the dollar index is concerned as of Thursday, and a reversal on the downside on Friday. And the euro has just the opposite. We have capitulation signals on the downside there as of Thursday, and a reversal to the upside. So with the movement that we're seeing in currencies, that really takes away some of the headwinds that gold was experiencing for since the middle part of September.
What's going on with silver?
And silver, now, this is, I think, probably one of the most important ones out there right now. We had what we call a combo 13 countdown on the upside into a month ago. And usually what happens out of that, we've got 20 signals like this in the SLV ETF during its life of trading. And of those 20, 16 of them ended up with multi-month corrections on the downside. 4 of them held in very well and then broke through the resistance level on the upside after a short consolidation. And that's what's happened this time around. The silver market, as of Friday, had an exceptional day on the upside. But the key is that it has broken through resistance. It's at multi-year highs, trading up around $33 now. But once you break out after this type of a pause, and what we call this is a failed 13. And some of the top money managers out there have viewed failed 13s as some of the most opportunistic plays that do occur. What you want to do is go with the trend as it's moving. And if we look at the silver market as an example, the 4 previous failed 13s where you did break out on the upside saw advances of anywhere from 21 to 50% in the ensuing few weeks. The most recent one was a 50% move in 2020, and that took all of 3 weeks. So things can get pretty exciting on the upside in silver. And as we know, for the precious metals, the last 10% of the time usually is the largest percentage move in terms of price on the upside.
Anything happening with the Canadian dollar?
Canadian dollar, 4 or 5 days ago, we got downside capitulation readings. We got a small bounce, and we've come back down to retest the lows. Now, the dollar should have a chance to rally out of such an oversold condition. I guess the overhanging factor is that the crude oil market, which had staged a pretty good rally that the dollar did not participate with, now the crude oil is in trouble. We're back down under $69, and that's going to keep some pressure, I think, on the Canadian dollar. And from a seasonal perspective, the crude oil market, you don't expect to see a low now until you get into the early part of December. So here we are, the middle of October. There's lots of room still, I think, on the downside for the crude oil market.
How's uranium doing?
I guess second only to silver in terms of the type of performance we saw this week. Now that Amazon has joined Google and Microsoft in terms of making multi-million-dollar commitments to the uranium, to the building of facilities, and I mean, everything is all out into the 2030, 2035 window. in terms of when things might be constructed and ready to go online. But the fact is that the movement there has really put a fire under the stocks. We did have really good double bottoms back in August and early September in the big names there, and the rallies have been pretty darn significant, to the point where names like Cameco and Denison and NextGen and the Sprott ETFs, the Uranium Juniors, are generating upside readings that are looking very overbought. We are probably within days of an interim high, and I would expect to see a decent correction there, at least to the 20-day moving average. And if we just pause in here for a while, could be that we come back and kiss the 50-day. And if you look back at the bull markets in Cameco over the last 20 years or so, it's very, very common to get those type of pullbacks within the rising trend.
Ross, you have not a Halloween trick, but a Halloween treat for our listeners.
Yeah, the treat is that we will be continuing with the 25% off the annual subscriptions for new subscribers. And, at this point, we've got a couple of nice ones. The recent pullback as far as the gold was concerned, and the uraniums have been a pretty good run. We even caught a little bit of a move here in lithium with a bounce off the bottom. So, it's not always in the big moves in the equity market and the broad indices, but it can be just about anywhere where we see opportunities.
Ross, thank you so much for the update.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on X at Charts by Ross. Coming up, Martin Armstrong, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Martin Armstrong, founder of Armstrong Economics, available online at Armstrong.Economics.com. Marty, welcome back to This Week in Money.
Oh, it's always a pleasure. How you been?
We're doing terrific in Vancouver. How are things in Florida?
Well, it got a little bit of hairy down here, but I survived. I'm okay, but we had two storms. Helene basically was really 150 miles offshore from me, but it created such a wind in the ocean that waves were just coming in. So that brought, piles and piles of sand in. So, it wasn't like a hurricane with wind here, but it was storm surge. So that was the first one. Then the second one was Milton, and that was more of a wind. So there you saw some wild things like taking down a crane in St. Pete. But most of the houses that were damaged were really ones that from like the 1950s, one floor block houses typically on the ground. So they tended to get flooded. So you see streets filled with debris, people throwing out their beds and everything else. But anybody that was like up, 17 feet or something like I am, we didn't get any water in the houses or anything of that nature. But it's been the wind, I think, that impacted a number of places, and then one Sunshine Beach, which was very low, that really got inundated with the first waves from the first Helene, and a lot of houses, the ones built of wood, pretty much a lot of them went down. So it's been interesting here on the West Coast because we usually do not get them here. They tend to be the ones that go start in the Atlantic, if they do get into the Gulf, they're doing an arc, so they more or less go up and hit Texas and Louisiana. They usually do not hit the West Coast. So these two were, Milton came from across the Gulf, started over by Mexico there, and Helene started just south, near Cancun. And so that kind of went straight up. So that's basically it. But, a lot of people, just lost a lot of their belongings and things like that in the houses because they all got flooded.
Following the hurricanes, are people returning to Florida?
Oh, yeah. I mean, it's quite busy down here. This is not something that is that common on the West Coast. And even in New Jersey, when Sandy hit, people thought, real estate's going to go down. People came in and were trying to buy them up. So we see the same thing here. I mean, I've personally got at least 3 or 4 emails. Gee, would you like to sell your house? No, thank you. But I mean, there are some people whose houses were seriously destroyed if they were damaged by more than 50%. Those people maybe are just selling what's there for the land and are not going to rebuild.
With this hurricane devastation, what do you think that's going to do to our insurance rates?
Probably not a lot. I mean, I can tell you what's happened here is I've seen a few friends, and the damage was really from Helene mostly, and so that's water. And insurance companies don't cover that. That's you have to go for the flood insurance. I mean, I had one friend where the waves washed a lot of his property out, left an indoor pool, making it look like it was an above ground type concrete pool, and insurance company came out and said, "Oh, sorry about that, but you're not covered. This is all water." So, the insurance companies I've never personally ever found over my lifespan where they ever pay for anything. If they can get out of it, they will get out of it. I mean, I don't know. Insurance companies are, to me, mostly a scam. And the joke for me is that if I die, they'll probably say it's a clone and I'm hiding someplace else,
Weather control patents have been filed over the past 100 years. Any chance those hurricanes could have been man-made?
Hard to say. But, I mean, that would really take an investigation. The only hurricanes that do hit this area are the ones that come straight across, as this one, Milton, did. The bad ones, 1848 and 1923, that one actually started in the Pacific, crossed Mexico, picked up in the Gulf, and came straight in to Tampa. So we don't tend to get them. The local joke is that the Seminole Indians were on the East Coast and they got tired of the hurricanes, so they moved to the West Coast, and everybody says we're protected by the Indian gods.
There you go. That's all you need. Now, what do you think?
Peace pipe and you'll be all right.
What do you think the economic ramifications are for the areas hit by the hurricanes?
Definitely a lot of small stores and things of that nature have been seriously hurt. Even my local post office, I went down there to basically just try mail a letter, and I looked in there, and it's completely wiped out. So things of that nature. It's hard to say, but I will say one thing for our governor. He is a stand-up type of guy. Because of the hurricanes and stuff like that, he suspends all tolls. I mean, I had gone up north to Chicago for one a few years ago and couldn't get back. And when I got back, I had left my car in the short-term parking lot at the I I came in, I thought I was going to have a bill for like $1,000 or something, and I gave them the ticket, and they said, "Oh, no charge. The government knows you couldn't get back." And that was it. I mean, DeSantis is actually a stand-up guy. In New Jersey, New York, they would have doubled it and said, "Oh, well, we're storing it for you."
Yes, shipping, handling, and excise fees.
Yeah.
Right. What are you hearing on the hurricane in North Carolina being a positive for lithium and quartz mining there?
Yeah, I mean, I don't think it impacted the current, I would say, mines, from what I've been told from people that are actually there. But, you know, that is a big lithium area, and the only thing I would say is that, you know, you had some Teslas and things of that nature. One guy had parked it in his garage, and they do not like salt water. These electric cars blow up, and his blew up and burnt down his whole house. So, you know, I don't know if you really should have electric cars if you live near the beach.
And yet Vancouver's the Tesla capital of North America.
Definitely do not drive it into salt water. I'm telling you right now.
The Dow again hit new highs this week. How long does Socrates think this bull market can continue? And explain for new listeners what Socrates is.
Well, Socrates is actually the only real artificial intelligence computers with more than a 40-year track record. It's writes over 1,000 reports on markets around the world all by itself every day. It shows largely that we're looking at the major resistance on the Dow is just a little bit higher, around 45,000, and you have to really exceed that area and this year's high. Then perhaps if you can make a new high next year, you would be looking at a continued rally into 26. Otherwise, it normally would back off. But the problem here is if you look at the Dow versus the NASDAQ, for example, you'll see the Dow's leading again. The Dow made new highs before, the NASDAQ can. Why? Because when you're talking about war, and we've got war in the Middle East, Europe, and they're beating the war drums in Asia with Korea and Taiwan. The money tends to come to North America, as I've said on your show before, and so the big foreign money that goes it goes first into the Dow. It's like when the Japanese were buying all real estate in the United States before, back in the 80s, they were buying the trophies. Rockefeller Center, stuff like that. They weren't going down the street and buying, $200,000 houses from moms and pops. That's more BlackRock. So you're looking at still foreign capital coming in into North America that's just trying to park it here. You've got Zelensky. His victory plan is basically the total destruction of Russia. That's what he's arguing for. Wants to be entered into NATO immediately, which would then invoke everybody in the world. We all then have to send troops. And he wants long-range missiles to attack deep into Russia. I mean, this is, he's declaring war on Russia. And he wants us to give him all the ammunition to go do this. Look, I've had employees both in Kiev and in Donetsk. The two of them would never talk to each other. All right. The hatred in that area is against various ethnic groups is just unprecedented. When Yugoslavia broke up, what happened? It broke up according to ethnic lines. That's what Ukraine should have done. The Donbass should have been, allowed to separate. That they're all Russians, and the Ukrainians hate them. I mean, the Ukrainians were part of the neo-Nazis. They killed Polish, Hungarians, Russians, and Jews. And they were exempt from prosecution because the CIA protected them because they were also anti-Russian. But I mean, all that can be looked up. I mean, that's a matter of historical fact. But this is where World War I came from. I mean, the ethnic hatred between groups is unprecedented in this area, and we should not be funding them. We should not be involved. He is going to basically just take us into World War III.
The U.S. dollar's been moving higher this month. What does Socrates see ahead for the U.S. dollar?
Again, it's on the capital flows, mainly because of the risk of war. Just keep in mind that, as I've said before, the U.S. was virtually bankrupt in 1896, which when J.P. Morgan had to lend $100 million in gold to bail out the U.S. Treasury. It was World War I and World War II that made the United States the reserve currency. Before them, it was virtually bankrupt. International war, Europe seems to think that, I guess they can take on Russia. What do they think? A third time is a charm or something? I don't know. But I have been over in Europe just recently and spoke to 3 governments, and I can tell you they're all like just cheering more. I mean, I don't understand this. I mean, 30 years ago, even a girl who won Miss America pageant stood up, well, what do you want? I want world peace. Nobody says that anymore, I want world war. Just go get them.
Gold is showing more strength. Does Socrates have any targets for gold?
Yeah, I mean, here too we have the same situation where capital is moving into that area. Plus, you have the U.S. sanctions that they put in against Russia was really brain dead. That's what started the BRICS. It wasn't dollar versus gold and all this stuff. It was geopolitical. Many countries after that realized that, hey, if we don't do what the United States says, they'll remove us. And then you had Antony Blinken, Secretary of State, threatening China. Well, we'll put the same sanctions on you if you help Russia. And so China goes, oh, okay, fine. So they start creating their chip system. You turn the financial monetary system into a weapon. And these people only want war, and they don't understand the economy or anything else. So gold is neutral. That's why they've been selling off U.S. debt, and they would be stupid if they held it. If you go into war with China, the U.S. is not going to pay that debt. They'll default on it. So why would you hold the debt of any foreign adversary? You have to be crazy. So they've been basically dumping, U.S. treasuries and switching to gold, which is at least neutral. They can't even buy euro because Europe's the same thing, or even Canada for that matter. So they would all end up defaulting on China or Russia or anybody, India. This is what's going on behind the curtain. It's divesting from the West because these neocons have been threatening the world.
Interest rates in the mortgage market, could they surprise to the upside?
Yes and no. As you go into war, interest rates do rise. All right, but that's more on the government side. Those that are smart would be preferring to take mortgages because governments default. And that's really what you're kind of looking at. And people don't understand so much, but if you just look back at 1980, the spread between the short-term and the long-term rates was almost 9%. That's just the spread between them. So this can get a lot crazier as we look at war and just look at governments that are going to continue to support Ukraine. And Europe wants war desperately. It's in the NATO is controlling it, and you can look this up. You'll see they're afraid of Trump because Trump really is anti-war, and so is basically RFK. And I've spoken to RFK. I know what's real and what's not. They are both anti-war, and so what's happening is NATO is trying to raise $100 billion to keep the Ukrainian war against Russia going if Trump wins. They want World War III, and they're afraid if Trump wins that he would clip their wings, so they're now trying to raise money so they can fund the war continued even if Trump wins.
Do you care about Bitcoin?
Not particularly. I would be more concerned about that. When you go into war, these people will put on capital controls. They did that for World War I, World War II. Particularly if you live in Europe, they're going to put on capital controls so you can't take your money out. That's what they're afraid of. Bitcoin is not really tangible. It's all electronic. It became a vehicle to get money out of China. That's why it took off so much at first. Over 80% of the transactions were all coming out of China. Then the Bank of China ended up calling them in and say, hey, what's going on here? They were using it as a backdoor to get money out. So I would be very cautious about that. I would prefer to hold physical gold rather than Bitcoin at all. You take out the power grid, and what are you going to do with it? You can't access anything. And they can use an EPM bomb if you're looking at, really confrontation with Russia. They can just detonate an EPM bomb, above the surface, and that wakes out the electricity. So I'm not a big fan of digital currency or Bitcoin or something like that. I think there's too much of a risk when you're in the throes of war.
Which commodities are good indicators for possible wars ahead?
Typically nickel. I would look at nickel and copper to a large extent, but nickel's probably the number one metal that they tend to use more for manufacturing things for war. Gold, I think, also pay attention to because gold rises largely in geopolitical conflicts when there's uncertainty. If you look at the rally back in 1980 in gold, most people don't realize, but it was $100 in 1976. It rose to $400 by December 1979. Russia invaded Afghanistan at that point. And when it did, gold went from 400 to 875 in 6 weeks. That's really what sent gold up that high. It wasn't inflation or anything else. It took place when there was a geopolitical uncertainty. And we have these people are threatening war on 4 fronts. You're threatening China over Taiwan. You've got Rocket Man over there in Korea. And you got the Middle East, and you've got Ukraine versus Russia. I mean, there's some serious risks on the table here, and there's a conflict of interest going back and forth with Turkey. Greece. U.S. gave Greece basically some fighter jets, and what did they say? Now we can attack Turkey, on a surprise. They're 2 NATO countries. There's a serious risk that Turkey will leave NATO and join with the rest of the Arabs, which are supporting Russia.
We're hearing in real polling, President Trump has huge numbers. Do you think huge numbers can overcome election fraud?
It's going to be interesting. I mean, our computer certainly shows that Trump should win the election. All the polls they're usually rigged. Look, Hillary spent 40 times more than Trump did back in 2016. All the polls were saying, oh, Hillary's going to win. Our computer said, no, Trump would win. The computer was right. Take Brexit over in Britain. Every poll was against it. Came out and said, listen, sorry, Brexit will win. Nigel Farage even came and spoke at our conference in 2019 in Rome. He said, of course I'm here. He's the only person that said we would win. The polls are usually always skewed, and they're not really trustworthy. Look, if you take a poll of only people in Washington, D.C., and you say, what would you vote for Trump? I mean, you're going to look at 90% for Camilla. So it's where you take the polls. I would trust, the only polling place I would trust more so than anybody else would be the Gallup poll. The rest of them, ABC, all the rest of them, forget it. I mean, I wouldn't trust them for certainly not. Don't shake your hands with them, because you better check and make sure you still have your arm, not just your fingers.
Former Presidents Obama and Clinton are making the rounds to promote Harris. Do you think the Democrats are in panic mode?
Yes. I mean, the biggest problem with the Democrats is when you just look at the plain stats, how many seats have they held? They're in a bear market. Anybody that takes this position of dictatorial power at the federal level has always lost. The very first party, the Federalists, they lost 6 elections to the Democratic Republicans of Jefferson, and they just simply collapsed by 1824. And then there was really only one party. And then that split because of the Civil War into Democrats versus Republicans, the South versus the North. But this is why communism failed. You cannot have a single policy for all. It does not work. And, I mean, just look at what the Democrats do with abortion, all right? Oh, this is it, and you're going to have to do this. Well, the Bible Belt, you're offending their religion. And they basically say, well, we don't care about your religion. You're going to have to change to our view. That's not the way you run a government. This is not democracy. This is dictatorship. So the Democrats are they're really in panic mode at this stage because they know the real numbers.
Following the election, what's the likelihood of civil war, and where would that civil war take place? What would be the likely theaters of conflict?
I don't know if we're going to get into civil war, but there is definitely going to be movements for the split up of the United States. You have 70% of the people in California say if Trump wins, they want to secede. And the rest of us over here on the right saying, right side of Florida are basically saying, please leave, go, don't ever come back. The country has been so polarized by politics, and the Democrats don't have anything to run on. So what do? They use this psychological tactic that you use in war. The Democratic Convention, they threw out Trump's name 289 times. You demonize your opponent. Now, they do that in war. Okay, you did that to Saddam Hussein. They're doing it to Putin. Oh, he's evil. He's this. He's that. Okay. And it fosters war, because then you're looking at everybody in Russia is like Putin. Even Jamie Dimon, who's the CEO of J.P. Morgan in New York, at Davos, came out and said, look, Trump was mostly right. He was right about NATO, right about China, and you have better stop telling the Democrats, he's barely a Democrat anymore. He says, you better stop this hatred of the other 50%. Over 70 million people voted for Trump, and you can't demonize people like that. And what's happened is the country is so polarized that, it's no longer united. As Abraham Lincoln said, a country divided cannot stand. They don't represent everybody. They get in there and it's going to be, now it's my turn to punish the other side. This does not work. Historically, it has never, ever worked. The Civil War side would happen if one side tries to use military power. Then you're going to see the military split. Some generals are going to be against the other ones. That's how Rome basically went. Most people don't realize, even you take the January 6th, all the propaganda about, all these people and Trump didn't, it was Pelosi. Trump authorized 10,000, basically National Guard to come in. They didn't want to call them in, and they don't want to tell this on the press. Why? Because most people in the military would have been for Trump, and they were worried that if they came in, it might be an armed insurrection. I know people that were there, called in, and they were being asked, who did you vote for? This is what they're afraid of. And just look at the 1991 Russian coup. Yeltsin stood on the tank, and he said, do not fire on your fellow Russians. They didn't. When they didn't, the coup failed. These politicians on both sides are nothing without the military. And that's when they fall. So it depends. If you start trying to invoke the military, it will split. Then you will get civil war. You'll get one group against the other, and they're going to be shooting each other. But hopefully it doesn't come to that.
With information wars and the pushing of vaccines, could we already be in World War III, just a different type of war?
Oh, yes. I mean, look, this is going way too far at this stage. It's all propaganda on so many levels. And COVID was largely, it seems to have been an exercise in control. I mean, so much evidence has come out now. From the British Parliament, I was given the code that they used to justify the lockdowns. I was asked to review it, and you can Google it on my site. I got the code, I reviewed it for them, and I went back and I said, this is like a child's game of SimCity. You put in an assumption, and then here it comes. But if your assumption's wrong, what comes out is also garbage. And they admitted, Ferguson admitted that they used the assumption that 20% of the people would die. It was wrong, all right? Absolutely wrong. So they locked down people, canceled culture, all this stuff on an assumption that was wrong from the beginning.
Is Ukraine more than a money laundering operation?
Yes. Look, Ukraine has been, even in the Pandora Papers, Ukraine comes up as the number one corrupt country in the world. It has more politicians with offshore accounts than anybody. Years ago, I was asked if we would do some work for Ukraine, and I was told, we can pay you in an offshore account, so you don't have to pay taxes. I said, excuse me? I said, no, sorry, don't want to do any business, thank you. When a government's telling you they can circumvent your own government, no thanks. I mean, it's just, Ukraine is infested with corruption, and it's infested with hatred. And we had a conference in Athens, and the one staff member from Kiev came out there and would not fly home the shortest route because there was a connecting flight in Moscow, and said, "Oh no, I can't go through Moscow." Spent twice as much time to try and get home because it would not go through Moscow. I mean, this is what you're talking about. Not even a connecting flight where you're going to stay over. It was like an hour and a half.
What's the latest on China, their economy, real estate, and the push for war?
They basically, I think, realize that the West seems to want war. And look, that's what this election really, really is about. Camilla is just a placeholder like Biden. And it's who's really running the country. It's not Biden, and it's not Camilla. It's the guys in the back room, and Anthony Blinken, who is the Secretary of State, is a neocon who has threatened everybody. He's threatened North Korea. Okay, fine. He's threatened China over Taiwan, threatens Russia, and now in the Middle East. We don't have enough troops for 4 wars simultaneously. But these people are just deranged. I don't know what else to say. And China has to look at all this stuff that's being thrown at them. You have NATO, which is supposed to be the North Atlantic, opening offices in Asia and going after China as well. These people are just insane. They want world war. And you better just take a step back and look at what they're doing. I mean, as I said, I was over in Europe and spoke with one of the governments there. I won't say which one, but they said, "Oh, well, Russia's going to have to accept our terms." I said, "Are you going to invade it? What are you going to do? You're putting out these dictatorial decrees." You had Estonia actually come out publicly and said Russia's too big of an empire; it should be carved up. I mean, what if Putin came out and said, well, Canada's too big. It should be carved up into different places, or the United States. I mean, you just don't do these kind of things.
Are the underlying economies in Canada and the U.S. in trouble?
Yes. Look, this is effectively the end of the road for republics. We're going to end up with a new form of government. We're going to have to square away. And this is also why they want war. Because your debt crisis this year globally, debt is going to exceed $100 trillion. There's no interest in never paying anything off. They just keep rolling it every year, and then they always spend more than they take in, so they always add to the deficit. And I've warned them in meetings for decades now. And I said, this is not going to end well. And it's all predicated upon selling new debt. And the problem they have is when you can't sell the new debt, you cannot then pay it off the old, because they're using the debt to cover the maturity of the old ones. And that's when the whole Ponzi scheme comes crashing down. That's what we're facing. We're facing a monumental debt crisis. And what I've heard, partly that they want to basically conquer Russia, because Russia is the wealthiest country in the world from a natural resource perspective. You can also Google up and look at Lindsey Graham, who's like one of the major neocons. And, Ukraine is about tyranny from Russia, and we're fighting for freedom and democracy. Oh, that sounds nice. All propaganda. On Face the Nation, he slipped, and he actually said the truth. I was stunned. He said there is $10 to $12 trillion of assets under Crimea, and we cannot allow Russia and China to get a hold of it. It's a natural gas field. So this is what you're looking at. It's just crazy, but this is always about money. They've sugar-coated, and Iraq, weapons of mass destruction never existed. You can Google up Pearl Harbor. FDR was trying to get us into World War II, and Congress kept saying no, no, no. So he basically, on the Japanese, he froze all their assets, cut off their energy. And when they said they would go get energy from someplace else, he said he would put an embargo against them. So they attacked Pearl Harbor. There was a Senate investigation on it, and because it came out that the U.S. had already broken the code, and they knew it. And there was also a leak in the newspapers. The day before, the Honolulu Tribune, I think it was, put out a story. We're going to be attacked. And so there was a big investigation in the Senate. Did FDR manipulate the U.S. into war so he could get into Europe? And they concluded, well, we're not sure. Look, they've lied about absolutely every war just to get in it. And the one, I think it was Churchill who said that the first victim in war is the truth, and to protect it, it needs a bodyguard of lies.
Do you think a recession or possibly a depression is on the way for Canada and or the U.S.?
Definitely a recession, but a different type. We're looking at what you would call stagflation, where the economic growth is going to decline into 2028. But at the same time, we're looking at the increased cost of production and in commodities, et cetera. So, thanks to the climate change, shutting stuff down, and you've created shortages, which is what COVID did. COVID really, in shutting down, the truckers couldn't go, et cetera. That's really what started the inflation. I got emails from farmers that had to kill like 30,000 chickens because they couldn't get to the market and they couldn't get food for them. So we're looking more at stagflation. So you're looking at inflation rising, but economic growth declining. So that's really the fate that we're facing going into 2028. And this is typical during war period.
Does it look like Trudeau in Canada and Biden-Harris in the U.S. are showcasing their insanity by pushing vaccines, crime, corruption, money laundering, and the destruction of cities in Canada and the U.S.?
Yes. Look, the first time I encountered this was that I was given the mandate for Hong Kong to negotiate with Australia. They were, when it was going to be handed back to China back in 98. So I they knew I knew the Australian government. I met with Paul Keating, who was, former prime minister, and everything I proposed, let us buy this island. No. Let us give us part of the upper left-hand corner. No. Everything was no, no, no. And I finally got so frustrated. I said, I've got a blank check here. I am authorized to pay off your national debt. All right. What's the problem? Is this racist? That's the only thing I could think of. And he actually said no. He said if we let them come into Australia, they were fleeing communism, so they would vote conservative. And therefore, he was a labor government, and they were concerned that they would change the politics of the country. This is why Biden, day one, when he walked into the White House the very first day, what did he do? He opened the border. And this is what this is all about. They've let all these people in. You can probably Google it up and find out. They put them all up in Chicago. They refused to accept vaccines. Okay, no problem for you. You're a foreigner. You don't have to. They give them free health care for life. They're getting more money than an average person would get after working all their life from Social Security. This is all about changing the politics. And they're hoping that these people are being bribed. They'll always vote for the parties of Trudeau and Biden and rig the game. That's what this is all about. We are the enemy. If you have a job, you're the rich. Doesn't matter how much you make. Unfortunately, that's it. Look at what Stammer in Britain basically calls the rich. An average person who has savings. He's got money stashed away. That's rich.
Do you think Canada and the U.S. are closer to breaking up, and what could trigger the breakups?
It's usually economic. Most likely you will see, in Canada, you'll see the West break off from the East. In the U.S., you're probably going to look at the West Coast splitting off. New England, another group, will split off. And either the Bible Belt will join with the South, or you'll get the Bible Belt and then the South. So it's either 3 or 4 segments. But as I said, as long as we keep the military with their hands in their pocket, shouldn't be violent. It should be basically a separation. I mean, even Rome had after 260 AD, the emperor was basically captured by the Persians, and it split into three regions: the Gallic Empire, Roman Empire, and the Asian Empire. Eventually, they fought to get them all back again. But separation is common. When the Soviet Union broke, okay, separation. You started seeing all these different places separate. In fact, the one that started it was Ukraine.
Do you think mainstream TV, radio, and print could be a thing of the past due to the pushing of propaganda?
Pretty much. I mean, if you look at the Gallup polls, it's appalling. They're maybe third from the bottom. Mainstream it's just gone so far to propaganda. It's pathetic. I mean, they think the freedom of speech is to their freedom to push their agenda and brainwash everybody else. But I mean, I no longer even watch TV. I mean, from them, any of them. I mean, the only thing I'll ever turn on is maybe the local weather sometimes. But otherwise, I mean, most people, I think, if you look at the elections, and this is their real trouble, if you look at the elections, it's basically maybe 10% of the population that really decides who will be president. Obama won, I think, 51.5%. Most of them are just 51, 52, 53%. You don't see 75%. Only 3 presidents in history ever even got to 60%. That was FDR the first time, Johnson after Kennedy was assassinated, probably a sympathy vote, and Richard Nixon when he said he was going to take us out of Vietnam. All the rest of them are generally under 55%.
Do you think smart homes, smart cars, smartphones, and smart cities are targeted to dumb people?
Yes, to a large degree, and I think you're looking at if these ideas of climate change, the climate has always changed. These people act as if, we're doing it because moms are driving around and creating CO2 by taking the kids to soccer matches. I mean, this is crazy. There's been ice ages, warming periods long before there were fossil fuels. So I would not really, be looking at what a lot of these people are talking about. Even you take nuclear, they were saying, you would, if a nuclear bomb would destroy that area, just look at Nagasaki, a vibrant city again. You're looking at where Chernobyl went. All the animals it was like a sanctuary for them. They were not affected. So, I mean, it's a lot of this stuff is very, very much exaggerated. And this is why also a lot of them behind the curtain are not so afraid of nuclear war.
Is the brain of a new style woke Democrat different from that of a normal person?
I don't know about that, but I mean, I think people have been conditioned over the years through schooling and things of this nature. So what they think is normal is really very strange and abnormal. People don't really look too deep. I mean, the whole transgender stuff is what's the real purpose of this? And it's really basically to try and reduce population. and you go to Thailand, that's the sex change capital of the world. There's transgenders everywhere. All right, they even have their own show and etc. The difference is they don't go around telling everybody you have to call me a woman and you're not allowed to call your mother a mother. I mean, where's this coming from? I don't think anybody really cares so much, what they want to do with themselves. But when you start saying, invading everybody else, what's a woman? We can't define what a woman is. I mean, now you're affecting everybody else. This is not eliminating discrimination, it's creating it.
Where can people follow you?
You can basically go to us at Armstrong.Economics.com. We don't sell any advertising. Don't have to, put in your email or anything like that. It's a free open source covering the world, basically every day.
Marty, thank you so much for being on This Week in Money.
Well, thank you for inviting me. It's always a great pleasure to talk to you.
My guest has been Martin Armstrong, founder of Armstrong Economics. Coming up, Hilliard MacBeth, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Hilliard MacBeth, author of the second edition of the book When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. Welcome back to This Week in Money.
It's always a delight to be on your show.
Hilliard, the U.S. election is just around the corner. Who's likely to win, and how could that affect the markets?
The election is so close to call that we can't really say who's going to win. It'll come down to 7 swing states, and the margins in those states under the opinion polling have Harris ahead in 4 by 1 or 2 points, and Trump ahead in 3. Only one of them has a slightly wider range of 5 points, but all of that's within the statistical margin of error. So on election day, there's a lot of early voting going on, but on election day it'll come down to turnout. And if there's turnout is high, the highest turnout in history was Joe Biden last time at 66%. And when the turnout was very low, when Hillary Clinton was running against Donald Trump, it went down to 60%, and that's when Trump won in, I guess it was 2016. So a clue is if the turnout is high, it probably favors the Democrats. If the turnout is low, it probably favors the Republicans. As far as the markets go, it's very different. So the Harris win would continue the Inflation Reduction Act and things like that. And Trump's win would be a story of a lot of new tariffs on China imports, which are inflationary, and some big tax cuts for corporations and for wealthy individuals. So that means the deficit which is already at a very high level, would increase more under Trump, although neither candidate is going to decrease the deficit a lot. And probably the economy will be overwhelmed by the factors that are in the cycle of the economy more than just who wins the presidency. And the other thing, of course, we don't have time to get into is who wins the House of Representatives and who wins the Senate. And that makes a big difference because in the U.S. citizen system, unlike the Canadian system, the president doesn't have a lot of power directly when it comes to fiscal matters. Spending of the government is in the hands of the House of Representatives and the Senate. So if, for instance, if Harris were to win the presidency, but the Republicans won the House of Representatives and the Senate, they currently hold the House of Representatives, and if they were to take over the Senate, then it would be impossible for the new president, to get much done. Anything related to fiscal matters could be blocked by the Republicans. So that is a very complicated situation, which the crystal ball is very murky on this one. But we are due for a recession in the U.S., so I would think that whoever wins is likely to have to deal with a recession in the first year of their term.
Now, how is the second edition of your book, When the Bubble Bursts, doing, and where can people get it?
People can get it everywhere at all the bookstores and stuff, and there seems to be, it's been in print now for 6 years, and it seems to be holding up. I don't get weekly records of sales or anything like that, but there seems to be also a renewed interest with the, one of the theses in the book is the potential arrival of a Minsky moment, which is where the lenders finally realize that the people they're lending money to can't pay the loans back. And that moment seems to be coming closer and closer when it comes to household debt and to some extent corporate debt in Canada as well. So private sector debt was examined very closely in the book, and it's a timely read right now because that seems to be where we're at in the heavily over-levered private sector in Canada.
Well, I do know a lot of people have either declared bankruptcy or have done consumer proposals with the bank to pay off, a large portion of their debt, but not the whole thing.
Yeah, the proposal, so the difference between those two is basically the mortgage. So if you have a mortgage, you can't get out of the mortgage unless you declare personal bankruptcy. But a proposal will take care of everything else other than the house and the mortgage. The proposal takes care of the car loan. In some cases, student loans, credit card debt, and such. And so the proposal is very popular rather than people don't like to give up their house, even though if they're underwater on their house, they'll do everything they can to hang on to their house. So there's a lot more proposals than there are bankruptcies. But if the lender gets nervous about the house and the loan is underwater, they may decide to foreclose on the home, and then that would be a personal bankruptcy for the borrower. But we'll see a lot more of that, I suspect. And we're also seeing a huge surge in corporate bankruptcies as well. So, and we don't see not all corporations that go under get listed in the statistics because some of them just quietly fold up their doors and shut down. We all know there's dozens of restaurants every year in our local towns that go under, and they don't declare bankruptcy. They just default and shut their doors and sort of go away and lick their wounds, and sometimes open up again 6 months later. But so it's hard to know. But the interest rates have not come down as fast as people needed them to in order to survive in some cases. They have to take the next step.
The Dow and S&P 500 hit new all-time highs again this week. What do you see ahead for the stock markets as we approach 2025?
Well, as you recall, we've discussed in the past, the Dow and the S&P 500, especially the S&P 500, are not only at all-time highs, but they're also extreme valuations. And one of the hints you get is Warren Buffett, Berkshire Hathaway, selling stock left and right to the point where they have over $200 billion in cash in a $700 billion portfolio, which is really unusual for Warren Buffett. So the evaluation is so stretched that these numbers are very questionable in terms of survival because we would need a huge increase in earnings. Now, there is a forecast for earnings to increase, but that depends on there not being a recession. So it's a huge bet on the soft landing scenario, which is one of the possibilities. But the more likely scenario is an actual real recession, which would bring earnings down quite a bit, and therefore the current all-time highs in the S&P 500 would have to be corrected by a substantial, double-digit percentage.
Gold is hovering around near all-time highs of over $2,600. Could this be due to escalating war concerns?
I don't think it's, of course that price is in U.S. dollars, right? So to some degree, it's a reflection of a lack of confidence in the U.S. dollar, if you like. So as gold goes up, the U.S. dollar is going down. And what's causing that, I think, is the fact that they're running a deficit. It's actually quite incredible that we're talking about, and it's not just me talking about a recession. There's lots of people talking about a recession in the U.S., although the numbers recently have been pretty strong. The recession possibility is quite high. But it's incredible that there even is a chance of a recession, given that they're spending a huge deficit. They're spending so much money more than what they're taking in taxation. The deficit is up around 7%, and it's not likely to be reined in no matter who wins in November. So this is one of the things that's really helping the gold market. It's actually quite amazing, though, that gold is hitting new highs given the interest rates. So the 10-year U.S. government bond rate got down to 3.5% a year ago or a few months ago when inflation dipped down close to 2%. And that was down from 5% about a year ago. And now it's back up about 4% heading higher. So the 10-year interest rate on the 10-year government bond has been rising quite substantially for the last few months. And yet gold has been going higher. So that shows you the lack of confidence in the U.S. dollar. That this is why people are moving some of the money into gold. The other thing that's impacting gold is, of course, there's lots of central bank buying. China's, tired of accumulating more and more U.S. dollar bonds and is now putting some of that surplus that they have into things like gold.
The U.S. dollar has been moving higher. What do you see ahead for the greenback?
So against other currencies like the Canadian dollar and other things, the U.S. dollar has been moving higher. The only thing really it hasn't been moving higher against is gold, but it's because of these interest rates. So if people see that they can get 4% or higher on a U.S. government bond, is considered the safest investment in the world. On a 10-year bond, and the 2-year bond's about the same yield actually. They're moving their money into the U.S. dollar. The weird thing about the U.S. dollar is, even if if there is a crisis or whatever the next crisis hits, even if it comes from the U.S. as it did in 2008 with the subprime mortgage crisis, the U.S. dollar still strengthens. So it's people. I remember when Canada was in trouble in 2008. Canada got through it fairly unscathed in terms of the banking system and the mortgages, but they wouldn't have if the Federal Reserve hadn't opened up a swap line between U.S. dollars and Canadian dollars. So the Canadian bank system was desperately trying to get their hands on U.S. dollars at that point. So the U.S. dollar is moving higher. Maybe it's people smell a crisis. It might come after the election. I don't know, but it's a safety play for sure.
Crude is seeing some volatility. What are your thoughts on oil?
Well, it's amazing when you think about there's two wars going on. Both of them started fairly small. The one in Russia invading Ukraine a couple of years ago, and now a war of type in Israel, Gaza, and Lebanon, with Iran possibly getting involved. Iran's attacked Israel now twice, which in the past would have shot oil probably $30 or $40 higher, and for some reason it didn't this time. So it's a puzzle. And one of the things that's happening is, of course, people are shifting from gasoline cars to electric cars, and it's a slow shift, but it's gaining momentum. And an awful lot of the barrels of crude oil in the U.S., it's about 45% of all the barrels of crude oil that are used in electric in ICE vehicles, but whether they be cars or light trucks, not counting highway trucks or trains or anything like that. So even if a small percentage of those combustion vehicles converted to electric, there would be quite a drain on the demand for crude oil. Some people say that crude oil will peak in 2030. It's probably peaked. Well, it has peaked already in the U.S. Much earlier than that. And but the question is the worldwide demand, 100 million barrels. Does it drop to 90? Does it drop to 80? It will drop as people use more electricity and less burning of fuel.
Yeah, I can imagine in 50 to 100 years, people will say, "You actually burned crude oil? It's so valuable for so many other things."
Yeah, the incredible thing about it is the energy in the crude oil that is put into the gas tank. 70% of it, more than 2/3 of it is lost to the atmosphere in the form of heat. So it's a very inefficient way of powering the vehicle. Using electricity, electric motors, only 30% of it's lost to the various frictions and heat and that sort of thing. So it's people in the future will be puzzled as to why we use that. But for 100 years or whatever it is, 110 years now, it's been phenomenal for for transportation and industrial development, that sort of thing. It's been very useful, but unfortunately has this terrible side effect of emissions.
Rumors are the Bank of Canada will drop its rate by half a point, 50 basis points on Wednesday. What are you hearing?
It's really interesting. The Canadian dollar's been quite weak as we speak here towards the end of the week. 4 or 5 days away from the decision, and the U.S. interest rates are rising. Mortgage rates are rising. The mortgage rate in the U.S. just hit the highest rate since August. So if the Canadian central bank drops the rate by half a basis point, we're going to see a very weak Canadian dollar. And the other thing that does for Canada, because Canada is such a big importing and exporting nation, is it imports a lot of inflation into our country. So it could be self-defeating if they drop rates too quickly, that people would start seeing higher inflation numbers and they might have to jack them back up again. So I'm guessing that given that the U.S. looks like it's backing away from the U.S. has only cut rates once, and now the rumor is that in November, the next one is just right after the election in the U.S. They might go slower or even have a pause. So the Canadian central bankers might be afraid of getting too far ahead of the U.S. central bankers. So I'm guessing that it won't be a half; it might be less, even though there are some signs that the economy is slowing in Canada to the point where it might make sense to cut rates faster.
Well, the U.S. dollar's been moving higher. The Canadian dollar has been going lower. At some point, could interest rates need to be hiked to support the Canadian dollar?
That's the danger. So if the Canadian dollar drops too fast and too far, it brings inflation back in because we all pay more for everything we import, and we import a lot, especially in the winter. We import a lot of food. So that would force the central bank to either live with a dollar in the 60s somewhere, which has happened in the past. It's been a long time since it has, but it's happened in the past. Or hike interest rates. So they won't really like the idea of hiking interest rates because, at the top of this interview, we talked about the fact that the household debt and the corporate debt in Canada are among the highest in the world. There's only a couple of countries in the world that have a higher ratio of private sector debt ahead of Canada. So, and they're only marginally ahead. So any interest rate increase in Canada is going to really cause some problems in the private sector with bankruptcies and that sort of thing. So they might just decide to let the Canadian dollar slip a little further and hope that it doesn't cause too much inflation. And that, of course, that'll give a big boost to exports, and it's generally considered to be a positive thing for a country like Canada that exports a lot of materials. But it's not great for the people heading south for the winter in Arizona and California, and Mexico. So because of the huge amount of debt that Canada has, and of course I haven't mentioned the government debt as well. That's also lately ballooned much higher. We're in a very precarious position in terms of raising interest rates in order to protect the dollar. It would probably bring on a very severe recession.
Even though the Bank of Canada is lowering rates, could mortgage rates head higher?
Well, that's what's happening in the U.S. So the U.S. cut their central bank rate, the Fed funds rate, they call it, at the last meeting, and mortgage rates have been rising ever since. And so is the rate on the, I mentioned it already, the rate on the 10-year government bond has gone up a half a point as well. So there's no guarantee just because the Bank of Canada cuts rates that interest rates don't go up. So people move their money out of Canada if rates are too low, and that'll push the dollar lower, the Canadian dollar lower, and go for those U.S. rates if our rates get too low. So for a long time now, our rates have been lower than the U.S. rates, and but we can't guarantee that they'll always be lower, and we can't control. I mean, the government could intervene and stop the mortgage rate from rising, but the Bank of Canada doesn't control the mortgage rate. It's the market that decides, and it's something that probably won't get too far away from the U.S. rates because even though we run an independent monetary policy in Canada, we're not really, in the end, we're not really able to deviate that far from what the U.S. is doing.
Stats Canada reported the annual inflation rate fell to 6.1%. What do you think the real rate of inflation is?
You mean 1.6%?
What did I say?
6.1.
Oh, well, it feels that way.
Yeah, well, I was, it's funny, because it peaked at around 9, and it's come all the way down to 1.6. So it's a pretty amazing thing. Now, the one thing that was holding it up, as we've talked about many times, is the shelter, which is the largest component of a CPI, and that shelter index has been coming down, but it's still much higher than 1.6. I don't know exactly where it's at, but it's and mortgage interest is a big component of that. So if interest rates on mortgages come down, then inflation comes down. If interest rates on mortgages go up, then the CPI goes the other way. So the real rate of inflation, the CPI is a strange construct, and it doesn't measure perfectly the real rate of inflation. Everybody I know, if you asked them that, they would say, no, there's no way it's 1.6%. All they have to do is go to the grocery store. So the thing, we're talking about an annual rate. But if you talk about in the last 5 years, how much has the cost of living gone up? It's probably pretty close to 25% in Canada. And that's the thing that people feel, because they can still remember how much they paid 5 years ago on certain items that they buy frequently. So unless you actually get outright deflation, where that CPI number went to a negative percentage on an annual basis, those costs are never going to come down, and that's a problem because people are struggling to meet their expenses, given that wages haven't gone up nearly as fast as inflation has gone up. So it's not the real annual rate of inflation that matters the most. It's can people afford to buy the stuff that is being sold right now? And it's really a mixed picture. Like, you see people and they're spending money on those all-inclusive vacations and going to restaurants and all that, but it is starting to show up in some indicators that people are struggling. One of the best indicators to watch, if you want to watch something, is the credit card business. So, if you can see that people generally pay off their credit cards each month, so they don't incur those 18% interest rates. If they start to be unable to do that and they start making the minimum payments, then that's a sign that they're really struggling. And we've seen that both in the U.S. and Canada. Those credit card balances are rising substantially and very quickly, which is an early indicator that debt crisis is about to hit.
In Canada, there's $2.2 trillion in home loans. Could this be putting banks at risk?
Well, the banks have had trouble over the years. In the last 45 years that I've been doing this, there's been at least 2, if not 3, crises where the Canadian banks had trouble. But quietly behind the scenes, they were rescued. So we never will know if the banks are so closely tied to the government that you're not going to see a Canadian bank go under or anything like that.
I was just going to ask if we would see bank runs or failures in Canada.
Yeah, I mean, like as soon as there was a problem in 2008, 2009, the government stepped in and said, "Oh yeah, we'll guarantee the banks 100% backing." And they also did something very unusual. They initiated the largest government spending program in history to buy back all of the insured mortgages from the banks, and the banks readily sold them because the price that the government offered was very attractive to them. So that really helped the banks out, and we didn't see any banks, unlike in England and other countries in the U.S. where a whole bunch of banks went under. We didn't see that in Canada because all of the banks in Canada are too big to fail. So, but the reality is, so just yesterday, the regulator that's called OSFI was on BNN, the TV show, and they were interviewing him, and he said he's quite proud of the fact, right off the top, that the default rate on mortgages is only 0.18%, and the low was 0.15%. So the default rate has gone up a tiny 0.03%. But what he didn't mention was that all of these extraordinary measures that have been taken where people have not been forced to get back on their amortization schedule. Some people are on the infinite amortization plan. Some of them have been allowed to go on the 30-year plan. CMHC mortgages now will be guaranteed up to $1.5 million, up from $1 million. All kinds of changes have been made. The lenders are exercising what they call forbearance, where they're not aggressively foreclosing on people's properties to try and help them get through this. And, that's arguably one way to go. But in the long run, though, if people spend all their money just trying to hang on to their houses, there's no money left for anything else in the economy. And that's what you really have to worry about is because of inflation and because of the very large loans that people have, they end up spending a whole bunch of money on basic items like food and shelter, and the interest on their very large debts. And there's really no easy solution to that. So we're just going to have to feel our way through it.
Are banks making it tougher to borrow money?
I think they are. I think one of the things that happened since we talked last is the U.S. regulator has slapped TD Bank with a huge fine, $3 billion fine, one of the largest fines ever, for their failure to stop money laundering. They were being used in the U.S. for money laundering, and they've agreed as part of the agreement with the regulator that they would cap their growth, which is a huge problem in the U.S. because that's what the Canadian banks are all about, is growing in the U.S. And they would also hire a whole bunch of anti-money laundering people to monitor their branches and their loans. So there's no way that the TD Bank is the only bank that's involved in this thing. They're being made an example of. And what happens through all the banks is that they all get worried that they're the next one to be triggered. So they're all going to change their practices, and that means tightening credit. So if on top of that, if the credit card failure rate starts to rise, as we talked about, if people start to default on their mortgages, because that's really the last thing that shows up is the mortgages. Like long before the mortgages start to show a rising default rate, people are in trouble. But they do everything else. They keep paying their mortgage, and they stop paying their car loan and their credit card loan. And their last resort is to get into default on their mortgage because they don't want to lose their house. So it's a big situation, and it's coming, and we have to figure out a way to get through it.
How prevalent do you think money laundering is in the Canadian economy?
So the report that was done in 2016, 2017 in Vancouver, Peter German report, and he was a former head of RCMP, so it was not a trivial, it was a very, very serious person doing a serious report, said that there was a huge amount of money coming just into the Vancouver real estate market, not all Canada, just Vancouver, in the billions, the multi-billions of dollars. So, and really nothing happened after that report. It was there's an investigative reporter named Sam Cooper that's written a book about it. So you can read the Peter German report, you can read the book that Cooper wrote, but really crickets when it comes to the regulators of the government. They haven't done anything. So, and it tells me that obviously there's a very big problem. And there's the classic thing that was talked about in Vancouver was the casinos taking in hockey duffel bags of cash, right? So that's where they're trying to launder the money through using the casinos, and I'm sure that happens all across Canada and all the casinos. But that's not, you don't get to billions of dollars in cash in hockey duffel bags. It has to be in wire transfers and things like that. So that's the big piece of the component that has not been talked about yet. And with this move by the U.S. regulator, I think you're going to see the Canadian regulators. One of the problems in Canada is there's a multi-jurisdictional, almost overlapping, contradictory people involved. So they all kind of point. So this interview I talked about with the head of OSFI on BNN said, well, that's really FinTrack that does that. So because it came up And FINTRAC is not under his review. And then FINTRAC, if you ever got them on an interview, they would say, well, really, we refer to the RCMP, so the RCMP is the one that dropped the ball, because there haven't been any prosecutions in Canada. So the only time we ever hear about anybody in Canada doing anything wrong is when the U.S. Levels a charge at one of the Canadian institutions, like has happened recently with TD. So there's some big changes coming in that, and I think it's very prevalent, and I think real estate is the obvious, ideal way to launder money, because once you flip a property, there was a luxury condo in Toronto. It's one of the, I think the Globe and Mail did a study on it. These condos were like $2, $3, $4, $5 million each. People were buying 10 of them, and they would sell them 2 or 3 years later at a loss, and nobody could understand why would they sell at a loss. It doesn't make it. They're putting $20 million in and getting $15 million out. Well, $5 million on $20 million is an acceptable price if you want to clean the money. And once you buy a condo from a developer and then sell it, you've got the cash in your bank account, then the bank has no problem moving that money wherever you want it, because it's come from a legitimate source, according, in the most recent transaction. So I think it's prevalent. I think it's helped the real estate market a lot, and but the noose is tightening, obviously, with this news about TD.
Well, according to the Criminal Intelligence Service of Canada, somewhere between $45 billion to $113 billion is estimated to be laundered in Canada every year. So
that's an incredible number. Like the number in the Peter Germain report, I think I didn't say it because I can't remember exactly. I don't have it in front of me, but I think he said in 1 year something like $15 billion came into just the Vancouver market alone, and that's just a phenomenal number. Like that, it's hard to believe. But there's been other studies that have been done that have corroborated that kind of size. So obviously, somebody is looking the other way. I mean, that must be pretty obvious. And this TD thing was amazing. These people were bringing cash to the branches in the northeastern U.S., bundles of cash, and the bank for years accepted them from people that were, I guess.
Well, again, in Canada, any transaction under $10,000 isn't reported. Yeah. So as long as you bet $9,999.
Yeah, but wouldn't anti-money laundering department in the bank get suspicious if somebody repeatedly came in with $9,000?
Apparently not. Well, no, you see, it was $998.97.
That's the trick. Yeah, the computer picks it up if it's 99, but not if it's 98. That's, like, the whole thing is mind-boggling, and I say that I think now it'll change because that seems obvious to me, but I could be wrong. I thought after the subprime mortgage crisis that the ability of financial institutions in the U.S. to make those kind of mistakes would be reined in by the regulator. But now it's now 14 years later, and guess what? The lobbyists in the U.S. have prevailed, and the rules, which were going to be tightened, they managed to thwart the efforts by the government to tighten the rules. And so we're right back to where we were, maybe even worse than we were prior to 2008, 2009. So I guess maybe the situation is there's an awful lot of people that would be hurt if somebody really actually got serious about tightening up on this money laundering, because there's a lot of money coming in and it's helpful to a lot of people. But I think it really hurts the average person because they see the price of real estate, for instance, going through the roof, and they can't understand. They can't afford it, but they can't understand who are these people that can afford it. And if the money's coming from other countries or from illegal practices, then that's the reason they can afford the real estate. You want people to buy real estate based on legitimate earnings, not fake earnings.
China is moving to tax the ultra-rich for overseas investment gains. What could this do to real estate in Vancouver and other Canadian cities?
Well, it's got to be a negative. The big part of the money moving into Vancouver was coming from China, and even though Beijing is probably doing this more as a symbolic thing than an actual real penalty, it has a chilling effect on people that would normally move their money overseas to buy real estate. So it might be something that's already slowed quite a bit, but real estate prices in Vancouver have held up much better than real estate prices in Toronto so far. So we'll see if this has an impact on Vancouver. I think it will have a negative impact.
What's the latest on housing inventory and sales in Canada?
So the housing inventory in Canada is going through the roof, and sales are at like multi-year lows. So there's a buildup of inventory that so far hasn't led to a huge drop in prices, except in the Toronto suburbs. But it's an overhang that will have to be dealt with at some point.
Where are we on the housing bubble bursting timeline?
Well, so we talked previously about the Minsky moment and the debt crisis that is looming. Basically, most of the debt in the Canadian private sector is related to housing, and we're getting close. You know, I've obviously was very early in sounding the alarm about the bubble bursting, but now we seem to be getting to that point where people cannot pay their debts and they cannot get refinanced. So that's what would trigger the final settlement in that bursting of the bubble.
In uncertain times, where do you put your money?
Well, the number one thing is to diversify. So Canadians tend to be investing in Canada, and so do most people in the rest of the world. Americans especially keep their money locally, and that's done very well for them. But it's important to diversify in all different kinds of asset classes: stocks, bonds, gold, everything except cryptocurrency. I don't dabble in cryptocurrency.
Countries all over the world seem to be cutting interest rates. Could the world be heading for a Japan-like economic model?
Well, you know, the interest rates, Japan was a very unusual situation, and they cut interest rates to zero, and for 25 years, nothing happened. The housing market did not recover, and the economy did not recover. So I don't know if inflation went negative, if inflation went to deflation, then I could see it's going much lower all over the world. But the government is doing everything it can to stop deflation from arriving.
Are the major car makers producing more models and selling more electric vehicles?
The major automakers are in danger of being left at the starting gate. They really have not made the moves that I would have expected they would have made by now. It's very difficult. Just as an example, I was looking at a new Ferrari that's been announced, $4 million Ferrari. It has 3 electric motors and a small battery, but the main power is from a V6 engine, and it goes 0 to 60 in 2.1 seconds, which is basically what a Tesla Plaid can do. So for $100,000 US, you can get a Tesla Plaid that goes 0 to 100 in 2.1 seconds, or 0 to 60, I should say, miles per hour, or you can get a Ferrari for $4 million. And with the Tesla, you get 5 seats instead of just 2 seats. So the major automakers are struggling with this electric wave that's coming over the automaker market, and I think it's going to be a lot of new companies like Tesla, BYD, and probably quite a few other Chinese companies that are going to take over the lead.
Hilliard, where's the best place for people to follow you?
So I'm on X at HMACBE. You can find me, Hilliard MacBeth, and pretty easy to find. And that's probably the best place. And I have a weekend note that I send out to people that put their names on their email address on the list, and we'd be happy to add you to our list if you contact us.
Hilliard, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Hilliard MacBeth. His website, MacBeth.Partners.com. He was speaking to us from Edmonton. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Martin Armstrong, and Hilliard MacBeth. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@housestreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allen.